And Ed, I want to start with you because this was kind of a confusing tweet from Michael Burry. So I was hoping you could just sort of decipher it for us.
Well, this is a sizable move lower in the stock, right? The most since September 2020, as you said. But the ideas behind it are not new. You know, Elon Musk has talked in the past about how he does not draw a salary from Tesla. He's the chief executive officer. And he does not draw a salary from SpaceX, a private company of which he's also chief executive officer. What he has done in the past is take out loans borrowed against the value of his stock and options-based compensation. And he has discussed in the past, in relation to criticism about the level of tax he pays, that he would eventually have to sell stock, largely because that's the only mechanism he has at his disposal that he would have to pay tax on anyway, and that he pays an effective rate of 53%. As with all options, some of those options expire at some point. So you'd have to ask the question, would it be prudent to not cash in? Probably not. But it's not a new idea. The question, of course, for all investors is how serious was Elon Musk about selling 10% of his stake in the company? Because you flood the market with that volume of shares, it's going to have an impact.
And so, Dan, I would love to hear your perspective on all of this Twitter drama that we've seen in Tesla over the past week or so. But really, it seems like there's always Twitter drama when it comes to Tesla. And you are a well-documented Tesla bull. Your bull case calls for an $1,800 share price. I'm curious, how do you reconcile that call with the fact that Musk so often moves the price of Tesla, which is a $1.2 trillion company, just with his tweets? I mean, that seems like a huge wild card here.
Yeah, look, it's always been, right? And it's part of that Musk cachet that we've seen play out, over the last few years. But it's hard to argue. I mean, this company is $1 trillion plus market cap in what we believe is a $5 trillion green tidal wave over the next decade. So in terms of this sale, obviously another sort of bizarro soap opera over the weekend. But at the end of the day, most on the street, including ourselves, we thought he was going to sell 5 to 6% of his ownership, just given the looming tax bill. 10%, obviously a little more than expected, but it's not a shock that he was going to sell. Now, of course, in typical Musk fashion, this could only happen to one company, one CEO, and it's Musk. But we view this as a blip of the radar.
Dan, let me ask you a hypothetical, which is a little unfair. But say Elon Musk had never sent that tweet and he just filed a regulatory filing as normal, sold his shares, and the market woke up to that. Would we see the same reaction?
Same exact reaction. It's just more the optics and the PR around it. And look, I understand what Burry's talking about is accurate in the fact that this is more of a sideshow to ultimately what was always going to be a sale of the stock. But I do believe it's created in typical Musk fashion, just that much more sort of drama and Twitter warfare over, of course, the poll.
And so, Dan, let's talk about the fundamentals of Tesla for a little bit, because it feels like there's more to grab onto for the bulls than there has been in the past. Tesla posted a 9th straight quarter of profit. We have this Hertz order of 100,000 cars that Bloomberg News reported. But we did have David Traynor, he's the CEO of New Constructs, on the show yesterday. And he made the point that Tesla would need 305 Hertz-sized orders to justify what has been built into the stock at this point in terms of revenue expectations. I'm curious how you would respond to that, because, I mean, Tesla, it's been going straight up for a long time now.
Look, I mean, the haters are going to continue to hate, right? I mean, they hated it at 100, they'll hate it at, $5,000 plus split adjusted. So I think it just comes down to your view of the market. I mean, our view of EV, its biggest transformation to the auto industry since 1950s. Only 3% of automotives are EVs today. If I look where that's going, I believe Tesla, this is just in the early days of playing out in terms of overall EVs. So I never view it from a valuation of where this is going to be over the next year, 2 years. It's the same way we view transformational growth companies. And I think if you view it near term, you missed out on Amazon. You missed out on Netflix. Now you miss out on Tesla. And I think the same that are negative on Tesla are, I think if they were NFL scouts, they would have been super negative on Brady coming out of 2000 draft.